Hey, good morning, everybody, and welcome to Wednesday, January 29th, as we winding down this first month of 2020. I hope you're doing well. It's good to have Dave back yesterday, and looking forward to our conversation again this morning. And I hope you are doing well. I want to thank you again for joining us. All this volatility in the marketplace, please, folks, don't become complacent. I've read several articles now where folks are becoming complacent about this volatility. If you're 5 to 10 years out from retirement, or you are already retired, you cannot become complacent with what you're seeing in the volatility. You need to have a plan, and you need to know what your risk number is. Call us right now to schedule your financial x-ray to determine what your risk number is and what the risk number is of your current portfolio. Give us a call at 863-382-0037. Hey, Dave is going to be here in just a moment. Looking forward to our conversation for today.
104.7 FM, Sarah Bareilles. Morning, Dave. 841. And because it is 841, we got one third person on the air with us as well, down to the offices of Statler Financial Services, where we're going to check in and find out what's going on with your money this morning. Phillip Statler is on the line. Phillip, good morning. How are you?
Hey, good morning, David. It's glad to have you back for a second day, 2 days in a row, man. I'm excited that you're back.
I appreciate it. And health concerns notwithstanding, I plan on being here as well. Start out the morning. Macro counts. We had an inventory report that showed retail being relatively flat during December and wholesale off by a little bit in December. No big surprises on that. Mortgage came up with a pretty good number, though, as far as home buyers, didn't it?
It really did. So we're seeing an increase in mortgage applications, up 7% last week. I didn't see the breakdown of how much is that in new home sales, how much of that is refinances as interest rates were ticking down last week. But given the new home starts we saw last week, I've got to think at least part of it's got to be attributable to new construction.
And that's always enough to cause a sigh of relief, since housing can drive so many ancillary industries, especially since it was a trigger for our disaster back in 08, 09 around our neck of the woods. It's good to see anything that indicates good news on the mortgage market.
Absolutely, because it's definitely it's a good sign. No matter how you look at it, it's a good sign, whether it's refinances or new construction or new home purchases. Either way, it's a good indicator.
Absolutely, and that kind of may contribute a piece to the fact that we're starting to continue a recovery that started yesterday on the indexes. Talking macro, it's always interesting to make observation on this. It's only one stock, but when Apple talks, everybody listens, partially because one of the things that they said in their report yesterday, if you took up their spare junk division, things like the earbuds and the like, all their little widgets and whatnot, that division unto itself would be a Fortune 100 company. That's one big company, and they had a good quarter, didn't they?
They really did. They beat by almost 45 cents a share. Revenue was well above forecast. They had better than expected sales of their iPhones and their wearables, which was good. The only place that they came in a little short was their service revenue, and they gave a better than expected revenue forecast for the current quarter. And so, go ahead.
I would say, when you consider the fact that they're starting out their TV streaming service with a freebie for everybody that buys an iPhone, the revenue is going to be lower, but their registrations probably are a pleasant surprise.
Yeah, I think so. They're actually up almost 2% this morning. If they open where they are right now, they'll be at a new 52-week high.
Wow, that'll be cool. I did notice that one of the ratings houses moved their target price up by $50 a share, which even in an expensive stock like Apple is amazing. One thing that I noticed in the Apple report yesterday was they've got the broadest range on guidance that they've ever given. They said like a $4 billion sales range while they look ahead into 2020. And they're saying it's because they don't know what's going to happen with the coronavirus over the Pacific Rim, so they're giving themselves a lot of leeway for things that could go kerflooey over there. I found that kind of interesting.
Well, I don't think they have much choice, Dave. When you look at at what's going on over in Asia and the coronavirus, it's so early on. Nobody has any indication of what it could amass to this year. And that could be a big factor, not only for Apple, but we're seeing things like McDonald's and Starbucks talk about the same thing. As a matter of fact, Starbucks, in their report, they had a good quarter. They beat by 3 cents a share. Revenue was basically in line, but they've warned that they are going to. I saw an article. They're going to close their cafes over there and stop their delivery service in China. So you have to realize that's going to take a toll on them. They're not getting hurt real bad this morning. I mean, they're down less than 0.2%, but still trading down.
That it's going to be a scary setting. The numbers that I'm seeing so far on the coronavirus is there are more infections so far detected for the coronavirus at this point in, I don't want to use the word pandemic, but it looks like it's getting in that direction. More infections, but a lower fatality rate than the SARS virus had, and that was our last major worldwide virus scare. So it's certainly something that they got to watch, because the CDC is saying it could be a full year before they got a virus out for it that's ready for human consumption.
Yeah, that's right. I mean, they're trying to get that put together to try to get some kind of injection so you can kind of prevent it and hold it off. But you're right. I mean, they're off. Who knows how long it's going to take to develop that? So it's going to be in the news for a while.
Absolutely, and it's spreading across a whole bunch of companies. We mentioned Apple, and you mentioned Starbucks, but I'll bet you there's a few more reports that are mentioning we don't know what's going on with China as well, right?
Well, that's right. McDonald's had a great quarter. They beat by a penny a share. Revenue was basically in line. But again, they're coming in and saying, hey, look, for the last quarter, our same-store sales were above consensus estimates. But for this quarter with this coronavirus, we're not sure exactly what's going to happen. And so, they're trading up about 0.2% right now, but still there's that unknown factor of what that could actually mean to them. You got Alaskan Air. You know that the air traffic and the vacation folks are feeling a pinch. Alaska Air had a good quarter this last quarter. They beat by 5 cents a share, and revenue was slightly above estimates, and they even raised their dividend by about 7%. But as we look at what they're doing and what their industry is, they're getting hit. I mean, they're down a little less than 1% this morning.
And my sneaking hunch is that we're going to see basically all the airlines that do business, especially in the Pacific Rim, probably going to be giving us some kind of weird guidance estimates over the next week or two while we look at those come in.
Well, a lot of those came in while you were out, Dave. A lot of the airlines came in, and they were getting they didn't come in. They had that report saying, hey, they were all getting affected, and their stocks dropped like 4%.
Yep, and it's
across
probably,
the board.
I was joking a little bit before we went on the air, talk about Mr. Obvious. One of the news ticker articles that I saw, this relates to the Starbucks and McDonald's for that matter. Anybody with an airport interest, and that includes all the fast food joints, all the chain restaurants and whatnot that have locations in the big airports, and there's a running ton of them, they're all going to be affected by this, because people getting on planes and off planes, even on this end of our country, they're coming in from the Pacific Rim. That ends up making all of those food services and restaurants somewhat suspect from the panicky financial markets.
Yep, you're right. It really does. Hey, let's talk about another company that you and I have discussed over the last year significantly, and that's Boeing.
Oh, yes, our poster child for public relations disasters.
Exactly. And so they lost $2.33 a share for the fourth quarter, and they reported their first annual loss since 1997.
Wow.
Yeah, big deal there. Now, of course, all of that's attributable to the 737 MAX being grounded. They figured that's cost them $18.6 billion, and an increase in production costs going forward of about $2.6 billion on the 737 MAX. Now, you know, you and I were joking when we were talking before we went on air that how in the world with all that stuff can Boeing actually be going up 3% this morning? Well, one of the things I saw is they are very confident that they will have FAA approval by mid-year for the 737 MAX to go back in the air. So I think some of this increase or bump in stock price is due to that outlook.
I got to ask the question in my mind, though. Is anybody going to be willing to buy one of those things once they are approved to go back in the air?
Well, and you're right. That's a good point. Maybe they have to rebrand it.
I've been saying for a long time they need to rename the plane the Skeeter or something just to get it back out of the out of the public relations disaster they got. Got time for one more. Anything major market mover report that you got?
Well, I don't know about major market, but let's talk about eBay. You and I have kidded about them before. You know, they came in 5 cents ahead of estimates at 81 cents a share. Revenue exceeded the forecast by a small margin, but still exceeded. But they gave weaker than expected guidance for the current quarter and for the annual outlook. So they're getting hit up pretty hard, like you said. They're down 4.3% this morning.
Yeah, on a beat. That's one of my experiences looking at my loser list this morning. Resetting the table, we had an up day yesterday on Wall Street, kind of a recovery from the earlier days' efforts. Dow was up 187 yesterday. NASDAQ up 130.3 points. That was almost 1.5%. And the Standard & Poor's was up a full percent, up $32.61 yesterday. I'm seeing mostly green on the markets this morning, Phillip. Are we holding it on the futures 45 minutes early?
Hey, everything is still coming up green, Dave. The Dow is up 124 points, a little less than 0.5%. The S&P 500 is up 8, about 0.25%. The NASDAQ is up 36, about 0.4. Hey, I did do a little research real quick while we were getting on the air. The NASDAQ index is a composite index of 3,300 stocks. Okay. So the NASDAQ 100, we didn't mention this, is actually of the NASDAQ 100, 30% of those companies are actually in a correction mode right now. That means they're down close to 10% or more. So keep that in mind as we look at what's happening in the marketplace as a whole. And then look at commodities. We got gold and silver is kind of a mixed bag, neither one moving much either way. And we got crude oil up another almost 1% this morning to $53.92 a barrel.
All righty. Overseas markets, I did my homework as well for a little more research. The reason Hong Kong wasn't off yesterday is they were closed one more day for the Chinese New Year. They're catching up with the mainland Chinese markets this morning. They closed down almost 3% this morning. Japan was up by a little bit, so are the European markets 45 minutes before we start trading. Phillip, somebody needs some advice. We can prove it by looking at things that have been going on for the last 5-6 days. Stability is not something you find in the equity markets. They can be good investments, but boy, if you're close to retirement, they're dicey. How do I find you to insulate myself from all this roller coaster?
David, give us a call at 863-382-0037. Ask for our financial x-ray so they can figure out exactly how much risk they have in their current portfolio. I was meeting with folks yesterday. Their risk number was a 35 and their portfolio was a 59. So these are things that are important as we get closer and closer to retirement. Hey, catch us online at statlerfinancial.com and then join us every weekend, you early risers, 6 a.m. on Saturday. Everybody else noon on Saturday, and then 10 a.m. on Sunday mornings on News Talk 7:30 a.m.
All righty. We'll be back again here tomorrow morning to see which way the roller coaster's going on Light FM. Phillip, thank you so much. Appreciate it.
All right, have a great one. I look forward to talking to you again tomorrow.
Catch you tomorrow. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Remember that.
Folks, again, I want to thank you for joining us today. I hope your day is off to a great start. I look forward to speaking to you again tomorrow. Remember, if you don't know your risk number, call us today, 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.